Welcome to multiple choice questions and answers on financial accounting. It's an initiative of Immaculate Metrics Plus. It is dedicated to providing complementary and supplementary education on financial accounting for WAEC, NECO, NABTEB, and the entire senior secondary school financial accounting syllabuses. It is intended to make learning verification, mastery, intellectual assurance, or examination readiness fun. In this session, we shall be considering 10 questions of set 1 to read the answers that have been provided on bank reconciliation statement. Viewers and subscribers have 30 seconds to select or choose the answer to each question. The answers to the 10 questions are reviewed at the end of all the questions. Please enjoy it. Question number 1. Debits in a bank statement not captured in a cash book make the bank column balance of the cash book to be A, less than the balance in the bank statement, B, more than the balance in the bank statement, C, equal to the balance in the bank statement, D, not to be affected in the first place, E, irrelevant in bank statement reconciliation. Some counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 2. Credits in a bank statement not captured in a cash book make the bank column balance of the cash book to be A, less than the balance in the bank statement, B, more than the balance in the bank statement, C, equal to the balance in the bank statement, D, not to be affected in the first place, E, irrelevant in bank statement reconciliation. Some counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 3. When a debit entry in a cash book bank column is not found in the bank statement, and where a bank reconciliation commences with the balance as a cash book, A, the item is not considered in the reconciliation. B, the item is doubled and added to the balance as a cash book. C, the item is added to the balance as a cash book. D, the item is deducted from the balance as a cash book. E, the item is halved and deducted from the balance as a cash book. Some counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 4. When a credit entry in a cash book bank column is not found in a bank statement, and where a bank reconciliation commences with the balance as a cash book, A, the item is not considered in the reconciliation. B, the item is doubled and added to the balance as a cash book. C, the item is added to the balance as a cash book. D, the item is deducted from the balance as a cash book. E, the item is halved and deducted from the balance of the cash book. Some counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 5. Which of the following are not used in adjusting a cash book before the commencement of bank statement reconciliation? A, account maintenance fee charged by the bank. B, VAT charges by the bank. C, direct electronic transfers to the bank by customers. D, SMS alert charges or notifications. E, across-the-counter check withdrawals by an entity. Some counts. 10 seconds gone. Twenty seconds gone. Time up. Question number 6. Errors of overcast or undercast in amounts recognized by the bank in an entity bank statement are A. Adjusted for in the cash book before reconciliation. B. Not considered in bank reconciliation statement. C. Considered in bank reconciliation statement. D. Not passable. E. Reversed in the month or period they are committed. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 7. Errors of overcast or undercast in amounts committed by an entity in the bank column of its cash book. A. Are left out entirely in the reconciliation process. B. Are corrected by adjusting the cash book before reconciliation. C. Are not relevant for adjustment of the cash book. D. Are reflected in the bank statement. E. Do not arise. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 8. One of the following can be found in the cash book but not in the bank statement. A. Uncredited check. B. Dishonored check. C. Direct lodgement. D. Account maintenance fee. E. VAT on bank account transactions. Counts. 10 seconds gone. 20 seconds gone. Time up. Question number 9. Which of these is incorrect about unpresented checks? A. They are found in the cash book. B. They are part of items of discrepancy for reconciliation. C. They are deducted from balance as a cash book for reconciliation. D. They are added to balance as a cash book for reconciliation. E. They are adjusted for in the cash book before reconciliation. And counts. 10 seconds gone. 20 seconds gone. Time up. Question number 10. For a bank reconciliation commenced with balance as per bank statement, which shows an overdraft position, unpresented checks are A. Added to increase the overdraft position. B. Deducted to reduce the overdraft position. C. Ignored. D. Reversed. E. Deferred. Some counts. 10 seconds gone. 20 seconds gone. Time up. We proceed to reveal the answers. Question number 1. The answer to question number 1 is B, more than the balance in the bank statement. B, more than the balance in the bank statement. Debits in bank statements are deductions from the amount in the bank account of an entity with the bank. They are recognized as credit entries in the bank column of the cash book. Where debits in a bank statement are not captured in the cash book, the corresponding credit entries are not made. This leads to the bank balance in the cash book to become more than that in the bank statement. B is the answer to question number 1. Question number 2. The answer to question number 2 is A, less than the balance in the bank statement. A, less than the balance in the bank statement. Credits in a bank statement are additions to the amount in the bank account of an entity with the banks. They correspond to the debit entries in the bank column of the cash book. Where credits in a bank statement are not captured in the cash book, the implication is that the corresponding debit entries in the cash book are not made. This makes the bank column balance of the cash book to be understated. The balance in the cash book becomes less than that in the bank statement. A is the answer to question number 2. Question number 3. The answer to question number 3 is D. The item is deducted from the balance as a cash book. D. The item is deducted from the balance as a cash book. When a debit entry in the cash book is not found in the bank statement and the reconciliation commences the balance as a cash book, the item, that is the amount of the debit entry, is deducted from the balance as a cash book. As the balance as a cash book is more than the balance as a bank statement, in this case, a deduction is done to bring the balance as a cash book to sameness with that of the bank statement. D is the answer to question number 3. Question number 4. The answer to question number 4 is C. The item is added to the balance as per cash book. C. The item is added to the balance as per cash book. A credit entry in the bank column of the cash book not found in the bank statement makes the bank balance in the cash book less than the balance in the bank statement. Where reconciliation commences with balance as per cash book, the amount of the credit entries added to bring the balance as per cash book to a reconciled balance with that of the bank statement. C is the answer to question number 4. Question number 5. The answer to question number 5 is E. Across the counter check withdrawals by an entity. E. Across the counter check withdrawals by an entity. Items considered for adjustment of cash book before commencement of reconciliation are twofold. 1. Those captured or recognized by the bank in the bank statement but not reflected in the cash book. And 2. Those that involve errors committed in the cash book by an entity. Items captured or recognized or entered in the cash book correctly are not adjusted for in the cash book. Answer options A to D, which are in the bank statement, are adjusted for in the bank statement before commencement, are adjusted for in the cash book before commencement of reconciliation. Across the counter check withdrawals by an entity are already correctly posted in the cash book and are therefore not adjusted for. E is the answer to question number 5. Question number 6. The answer to question number 6 is C, considered in bank reconciliation statement. C, considered in bank reconciliation statement. Errors of overcast or undercast in amounts recognized by the bank in an entity's bank statement are errors of the bank, not that of the entity. Therefore, such errors are not used or considered in the adjustment of the cash book of an entity. Rather, they form part of the items considered in the bank reconciliation statement. C is the answer to question number 6. Question number 7. The answer to question number 7 is B, are corrected by adjusting the cash book before reconciliation. B, are corrected by adjusting the cash book before reconciliation. Errors of overcast or undercast in amounts committed by an entity are errors of the entity, not that of the bank. Therefore, these errors of overcast or undercast in amounts are adjusted for in the cash book by passing the corrected entries. Thereafter, The balance as per the adjusted cash book is used to proceed with the bank statement reconciliation. B is the answer to question number 7. Question number 8. The answer to question number 8 is A, uncredited check. A, uncredited check. An uncredited check is a check recognized as a debit or inflow in the cash book and lodged with the bank, but which has not been posted by the bank into an entity's bank account. Uncredited checks are found in cash book, but not in bank statement because they are yet to be posted by the bank. A is the answer to question number 8. Question number 9. The answer to question number 9 is C. They are deducted from balance as per cash book for reconciliation. They are deducted from the balance as per cash book for reconciliation. In bank reconciliation statements, unpresented checks are added to the balance as per cash book. They are not deducted. All options apart from option C are correct about unpresented checks. C is the answer to question number 9. Question number 10. The answer to question number 10 is A, added to increase the overdraft position. A, added to increase the overdraft position. For a bank reconciliation commenced with balance as per bank statement, which shows an overdraft position, unpresented checks are added. This increases the overdraft position. The basis for this is that unpresented checks are credit entry items in the cash book, which reduce the balance of the cash book. For a cash book with an overdraft balance, unpresented checks increase the overdraft position and thereby moving it towards sameness with the overdraft balance in the bank statement when added to that overdraft balance in the bank statement. A is the answer to question number 10. That is all for this set 1. Thank you for joining us for the set 1 of bank reconciliation statement. We invite you to subscribe to our channel, share our links, and invite other students and their parents or guardians to do the same. This will enable everyone to get direct notifications on future video uploads. We intend to cover all of the topics in the WAEC, NECO, and NABTEB syllabuses and create further sets of questions and answers of topics already covered. These topics automatically covers financial accounting topics from SS1 to SS3. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the series are reserved for Immaculate Metrics Plus. Thank you once again, and bye for now.